Weak institutions, especially revenue collection and customs authorities, are a challenge in Africa, which loses billions in potential tax revenue, including through tax avoidance and evasion, especially by multinational companies. This undermines efforts to mobilize domestic resources to finance the continent's development. African countries fare poorly on domestic resource mobilization compared to other developing countries. Governance influences tax revenue collection considerably on the continent. Good governance and strong institutions measured through regulatory quality, the enforcement of the rule of law, strong institutional capacity, and lower corruption enhance a country's ability to mobilize domestic resources through revenue collection. This is where digitizing Africa's tax systems comes in. And because of the importance of tax revenues to African economies, that's why New Central is partnering with the West African Tax Administration Forum to highlight the challenges, the solutions, and the importance of the continent getting taxation right. Joining me now is Andrew Chegi. He's the Managing Director of Safari Tech Limited, which specializes in auditing, developing, and providing innovative technologies and advisory services to national revenue agencies. Andrew, welcome to Business Edge. Thank you so much for joining me.
Thank you very much.
So in terms of the current state of tax systems across the continent, that's where I want us to start. It'll help us to lay a foundation and understand why the digitalization of Africa's tax systems is so important. So with the challenges we're facing and many economies lagging behind, where do our tax systems stand right now?
That's a pertinent question. And of great importance is to know that taxpayers moved the digitalization way long time ago. So with technology, government has always been playing catch up. Now, digitalization in particular allows the government to process more information on different economic outcomes of taxpayers, such as their earnings, capital incomes, consumption expenditures, and other means of incomes. Information from various sources can be used to more easily identify taxpayers who evade taxes. This facilitates integration into formal economy of the informal sector, who were previously had unreported transactions. And in particular, this is the cash economy that is prevalent in Africa. Now, this continent has seen a drive in growth for revenues, and giving credit to most revenue authorities that have interacted with and worked with, digitization has actually been taking place, especially over the last decade. So all taxpayers and economic activities are getting integrated into the formal economy.
Okay, and that takes us to my next question, which is really about the progress that's been made across the continent. Given the fact that you work with national revenue agencies, have they scaled up enough to meet the taxpayer, the African taxpayer that has now digitalized a lot of what they do? Have these revenue agencies been able to scale up and meet the taxpayers' demands of what they want in terms of how taxation should be digitalized across the continent?
Compared to the early 2000s, when most of their systems were manual, as I said earlier, in the last 10 years, the importance for digitization could not be overstated. And the countries in Africa, very few exceptions, possibly due to economic capacity, have not been left behind. And they have been enjoying the ability now to reach the taxpayers, and without which, those who have not digitized, because we need to talk about them, they have, for example, the wrong ledgers. The data are not interlinked. For instance, an importer has data in the customs department that is not known by the domestic revenue. So during refunds, the reconciliation has to be done manually. The same with CAPEX deductions. Either way can be subjective. A taxpayer can overclaim, or even the government sometimes could miss a digit, maybe a zero, and overstate the expense for the taxpayer. So the center line here is on digitization so that accurate figures are always presented during engagement between the bodies.
So you lead me into a very natural question, because in the beginning I did mention that there's a lot of tax loss running into the billions across the continent because of tax evasion and avoidance as well. So when we look at the cost of not upgrading, the cost of not digitizing our tax systems, can we look at the possible revenue losses that would occur if we continue, if some economies across the continent either lag behind or they're not upgrading and digitizing as much as they should?
Yes, the cost benefit analysis is clearly in favor of those who digitize. Take one sector like the telecom. The telecom sector is one of the largest supplier of taxes in the African economies, given that they don't have robust manufacturing enterprises. So they are reliant mainly on service sectors, the hotels included and others. Now, if they don't invest in digitization, the loss by under declaration by a single telecom would wash away the gains made by taxation of the rest of the economy. Such sectors that have complicated structuring require digitization to give clear visibility. Then the other advantage is that once the taxpayer knows the revenue authority has their records, the propensity to underdeclare diminishes. Thirdly, the tax burden distribution is normally leveraged upon digitization, where some people should not be seen to be paying, whereas others are shouldering this tax burden. Then that follows, that actually breeds the tax resource accountability. Again, with digitized economies, the accountability and the openness is guaranteed. So this makes life easier for the authorities so that they can have time to focus on higher value economic activities. It also allows the authorities to simplify the procedures and reduce the compliance burden on taxpayers. To just give you an example, Kenya here reduced the VAT from 18 to 16% when they introduced the electronic tax register system. And this reduction, coupled with the introduction of digitization, was able to harvest VAT revenue and improve it by 444%. So other countries like Tanzania, Rwanda, Ethiopia, Zimbabwe, and now Sierra Leone, and there are quite a number have followed suit with impressive results.
All right, it's good to see that there is progress, and where it's working, countries are looking to implement that. But let's talk about disproportionate impacts. When we look at digitalization of tax systems across the continent, is there a way we can ensure that marginalized communities do not end up carrying undue burdens or are disproportionately impacted by this need to upgrade and to, of course, widen the net and deepen the tax net as well?
Yes, that is quite pertinent because marginalized communities in the first place have less economic activities. And in Africa, that forms the base of the pyramid. These are people who need to be handled with care, to use the words, rather than with harassment. So that startups in Africa, more than in the West, they require kids' gloves approach. So they grow and mature into the next level. The medium level tax payers category who are able now to give better taxes. So the synergies that comes with this help to isolate and understand these people because there is clear visibility of the economic activities to the taxman. On your second point, it's better to expand the tax base rather than to increase the tax rate, because it's been seen that increase in tax rate has a commensurate reverberation on the economic activities because traders sometimes get scared and shut down. So it's better to distribute the tax burden more than to increase the rate.
So, Andrew, are there any risks associated with digitalizing Africa's tax system, or this is a 100% risk-free exercise that we should expect our economies to undergo?
Definitely, like any change, because we are dealing now here with change management, there are risks that have to be appreciated. One risk, for example, many countries have gone into, you will see they are on their second or third system because the first system had mistakes. For example, a common one is vendor-driven systems where they don't have independent transaction advisors. Now, Ghana scores an A on this front. Ghana doesn't touch anything that has no transaction advisory. Then you also require an independent and robust quality assurance system so that whatever system you're going to install is independently quality assured to ensure that it meets the requirements of the design which emanates from the business departments. The last one, which is a great pitfall and unfortunately not just in Africa, is in the rest of the continents, is data cleaning. Now, I think now it's common knowledge that garbage in results in garbage out.
Yes.
So when you are automating, you need to have the correct data, data that is not corrupted. For instance, we have the TIN or the PIN. If the PIN field is corrupted, then you cannot have a linkage between one trader in their customs database and link them into the domestic database. Like in Kenya, the same field is used to link the taxpayer to Kenya Power and Lighting or the utility company and see their economic activities, duplications, and incomplete data sets. So the first thing is to make these fixes, and those are the greatest risks.
All right. So, Andrew, before I let you go, I have to talk about compliance, because one of the biggest issues with taxation anywhere, whether it's in Kenya, Nigeria, on the continent or beyond, is the issue of compliance. So what connection does the digitalization of tax systems have with voluntary compliance on the part of taxpayers? Can it help to improve transparency and accountability of tax collection and give the taxpayer more confidence in the system and governments for what their tax money is doing?
Sure, yes. Compliance has been reliant largely on officers. And we can always, because this is not a hidden thing in the continent, sometimes officers enrich themselves during these exercises. With digitization, there is every possibility to cascade this now to the taxpayers and informers. And this has worked well, especially in Tanzania, where we have the QR code on their electronic tax register receipts. When you are doing your purchases, a common citizen can be able to scan on their phone or key in the barcode and inform the authority this is a fake receipt. Now, this is much better done by the people out there, especially if they know there is an informer reward. So the more these economies and these governments can inculcate the culture of having the common man, that is a holo ipoloi, assist in this, the earlier and the better this happens. Remember, the earlier compliance happens, the less you need to do audits, the less these engagements between taxpayers and the government becomes painful. So if this thing is nipped at the bud during the transactions, then everything that goes into the system is clean. And it's, in a way, I can say it's vetted by all levels. And that way, you have less litigation.
All right, Andrew, we'll leave the conversation there. It's a partnership between New Central and the West African Tax Administration Forum. So we'll be having these conversations, and I'm very sure we'll probably have you again sometime soon to look at the issues around taxation and tax administration here on the continent. Thank you so much for joining me.
Welcome.